HSBC Holdings, is it a buy leading into earnings, stock analysis, and future outlook? HSBC is currently trading at $55.09 with a market cap of $196.29 billion. With upcoming earnings, major restructuring, and global expansion plans, SBC a buy, sell, or hold right now. In this video, we'll cover all key financials and earnings expectations, bullish and bearish signals, technical analysis and price targets, future catalysts and risk factors. Let's dive in. Section 1. Key financial data. As of February 15, 2025, here's where HSBC stands. Stock price $55.09. Market cap $196 billion. Earnings per share $6.10. P/E ratio 9.3. PEG ratio 348 5-year expected. 1.02, trading near book value. Shares outstanding 3.57 billion. Beta 0.69, lower volatility compared to the market. 52-week range 36.93.55.36 HSBC's next earnings report is set for February 18, 2025, which will be key for assessing profitability and restructuring progress. Section 2. Fundamental strengths, bullish signals. Cost savings initiatives. HSBC plans to announce $1.5 billion in annual cost savings under CEO George L. Heddery's restructuring plan. Investment banking operations are being reduced to focus on higher-margin business areas. Strong valuation metrics. A P/E ratio of 9.03 suggests HSBC is trading at a reasonable valuation relative to earnings. A P/B ratio of 1.02 indicates the stock is priced close to its book value, signaling potential undervaluation. Global diversification. HSBC operates in over 60 countries, reducing dependence on any single market and offering diversified revenue streams. Section 3. Fundamental weaknesses, bearish signals. High PEG ratio. A PEG ratio of 3.48 suggests HSBC may be overvalued relative to expected earnings growth. Earnings decline. HSBC experienced a 52.38% decline in earnings per share growth, raising concerns about future profitability trends. Restructuring risks. Cost-cutting measures are positive in the long run, but the reduction in investment banking operations could lead to short-term revenue declines and market share losses. Section 4. Technical analysis and price targets. Current price $55.09. Support levels $50 and $45. Resistance levels $55.50 and $60. 50-day moving average $52. 200-day moving average $48. RSI 62, approaching overbought territory, watch for pullbacks. MACD positive, indicating upward momentum. If HSBC breaks above 55.50, a push towards 60 plus is possible. If it drops below $50, it could retest $45 support. Section 5. Risk, value, and buy ratings. Risk rating 6 out of 10, moderate risk. Global diversification helps mitigate risks, but restructuring challenges and earnings declines present headwinds. Value rating 5 out of 10, fairly valued. Attractive P/E and P/B ratios, but a high PEG ratio and earnings decline temper enthusiasm. Buy rating 6 out of 10, hold moderate buy. Investors may consider holding existing positions or buying on dips, especially if upcoming earnings exceed expectations. Section 6. Upcoming catalysts and market outlook. Earnings release on February 18th. Key insights into cost-saving initiatives and profitability. Dividend announcement. Any updates on HSBC's dividend policy could impact investor sentiment. Market expansion plans. HSBC's strategy in emerging markets and new business lines could serve as a growth catalyst. Final verdict, should you buy HSBC pre-earnings? Bull case, HSBC's cost-cutting, global diversification, and reasonable valuation metrics could drive long-term growth. Bear case, declining earnings and restructuring risks could limit short-term upside. Verdict, hold moderate buy, 610. a solid banking stock with long-term potential, but upcoming earnings will be critical for short-term movement. If you're planning a scalp trade off earnings, be moderate with your stops. What do you think? Is HSBC a strong buy or too risky? Drop your thoughts in the comments. If you found this analysis helpful, smash that like button and subscribe for more stock breakdowns. Thanks for watching, and I'll see you in the next video.